Hi, this is Zach here with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 19th of January. Starting off with 88 Energy, which is reviving itself at the moment. We've got a bullish divergence line in there, which you'll see on some of the other stocks here today. That was basically showing that we were on alert for a rise in the stock towards the end of last month, around 1.4 pence, and obviously we've done well since. Current position is that we've got a breakout of a V-shaped bull flag and above the initial January peak at 1.85 on an end-of-day close basis, we could hit the top of that broadening triangle from March as high as 3.5 pence, maybe as soon as the end of next month. Stop loss back below 1.5 is probably going to do the trick, which is the September resistance line breakout level. On to Ascent Resources, where I think this is the company which is looking to beat the Slovenian government, which obviously may or may not happen. But as far as the technicals are concerned here, we've got the rising divergence line here as well. So that's suggesting that there is momentum behind the latest bounce off the May support line. That's also at the floor of a broadening triangle heading towards 8 pence. Initially, we should at least get back up towards the 4.5 pence area, which is the July resistance line. So that's not wouldn't be too bad, but the big picture, maybe 2-3 months, something like that, up to 8 pence. If we can get a decent weekly close through the 4.5 pence area, but clearly early days yet on a potential recovery. If you are cautious, maybe wait for an end of day close back above December support at around the 3.6 pence level. So a few parameters to look for there, but that rising divergence line looks quite healthy. On to Alba, which is I think not been treated well by the market. Not quite sure why that is, but at least it's being treated better now. We've had a bullish divergence line there from, I suppose, that support point there, middle of last month. So that was flagging that we could be set for a turnaround. But breaking that falling wedge from April and the 50-day moving average of 0.15 makes this situation look rather better. Initial target here up to 0.22. Which is the 200-day moving average and October resistance, best case scenario up to 0.32, which obviously would be one hell of a result, given where we are at the moment. Only back below 0.14, really delaying the recovery argument at Alba at the moment. On to Arkle, which, if I can get the stock up, here we've got a situation where it's one of those sort of snapping trend line situations. Also a bear trap from below previous support there at 0.75 and above 0.75 and above the 50-day moving average and that broken September resistance line. We could see the shares head as high as 1.5 pence over the next couple of months. A weekly close above the 200-day moving average, just around the 0.8 pence level, would make it a rather more solid look for Arkle in the near term. On to a stock which has been requested, and I think I've interviewed a company a couple of times before. Here we've got Brad Ahead, which is just emerging from a bull flag, top of the flag there at 13.2 pence, so an end of day close, weekly close above that, and we could be heading towards what might seem slightly ambitious, a target there up towards that July resistance line projection around 18.5 pence. That could be seen as soon as the end of next month. Positives here, apart from that August resistance line break and the sideways shuffle, are the rising 50 and 200-day moving averages, which I describe as an ongoing golden cross situation. On to another oiler, which is getting itself off the ground, Europa Oil and Gas. Here we've had a bear trap, a sort of minor bear, the smallest of the bear traps there from June support there around 1.1 pence. Just went back below that for a day last month and then pushed back up again, which is normally healthy. Gap through the 200-day moving average just earlier this month and another gap higher today. So loads of gaps, unfilled gaps tend to mean that there's a re-rate in place for a stock or a market, and for Europa, that could mean that we at least head up towards the 2.1 pence area, which is that resistance line there from back in March. Obviously, if we found the shares, you'd be hoping for a retest of that blink and you missed it March peak from last year. But 2 pence looks fairly well nailed on at the moment, especially while we're above the floor of the gap at 1.3 pence. Moving along to another resources play, Egdon Resources, and Here, a strange chart here. We've got the double bottom around the 1.2 pence level, but on the last rebound, uphill gap at support, that tends to be a very strong signal, and that's strong enough for us to not only be looking towards retesting October resistance at 2.15 pence, but also the top of that rising trend channel from January last year, as high as 3 pence, maybe over the next month to 2 months, let's say. Only back below 1.4, the 50-day moving average area currently really delaying the upside scenario. Interesting that a lot of people guessed correctly that Helium 1 might have some good news last week. The current situation is that we're holding above the floor of the August gap there at 9.95 pence, and above that looking for the 200-day moving average at 13.5 over the next couple of weeks. The good news, fresh good news, would come from an end-of-day close above the top of that August gap there, which was around 12.3 pence. We can get that this week, then the best case scenario target up to 20, which I suppose would be quite a surprise given the rather calamitous fall that we had back in August for the shares. And only really back, but well below 9 pence, really delaying the upside scenario at the moment. More quirky choice next, iNexus Global. Here we've been bumping along the bottom for quite some time. Again, a minor bear trap effect here from just a slight push at the end of November, December, below the initial 2021 support, so below 4.8 pence, but we snapped back well. Good sideways shuffle there at and above the 50-day moving average at 5.3 pence, and above that looking for 8 pence. At a September resistance line projection. And just to add to the excitement, there's a bullish divergence line there in the RSI window, which should provide further ongoing momentum. I've been quite a fan of Prospex Energy over the recent past, and I think I was calling the shares up to that resistance line there from back in February. We've basically the 6 pence area, so we're not far off there now. And at least while we're above the 4.5 pence level, looking for 6 on Prospex, if I can say the name of the company properly. Bigger picture, probably looking for much more, especially given the way the energy market is looking at the moment. So something like the line I'm about to draw now, which would be a line of resistance from back in 2019, maybe heading towards 7 or 8 pence. On a 2 to 3 month view, maybe even sooner, given that we've been rising quite vertically over the recent past. Quetzal has revitalized itself after the TAP Global deal, and again, another stock with a bullish divergence line, which has been in place basically since you could sort of identify it around 3.5 pence, 4 pence back in December. We also saw that the shares had bounced off that March support line, and that was the early call here, bear trap rebound. Current position is that we've had good consolidation above the rising 50-day moving average, and the longer we stay above that at 4.5 pence, the greater the chance of a 2 to 3 month target as high as the top of the Broadening Triangle from March up towards 11 pence for Q1 2022. Couple of stocks to go now. First one is, I suppose, underlining how the rising oil prices are focusing minds, even in the less popular oil and gas plays. So UOG at the start of the latest rally and was a bear trap gap reversal. So bear trap gap reversal from below September support at 2.4 pence. Above 2.4, we were looking for the 3 pence area at that August resistance line. The August resistance line, which has been broken now. And above the 50-day moving average, at least 2.5, looking for 4 pence. Which is an August resistance line projection. So above 2.5, looking for 4, especially if we get a decent close above the 3 pence area. So it looks like finally UOG's on its way. We did have a bullish divergence line here, which did predict the move for December, January quite successfully. So maybe technical fans can pat themselves on the back. Finishing off with Euro Metals, which had a great rally back in the summer, and obviously has had an even greater decline over the autumn and winter. What's interesting here, though, is that we had an unfilled gap off support, off the lows rather, sideways move, which tends to be very bullish in the sense that does suggest that the sellers are all finally out, and a break now of the 50-day moving average of 184, above 184. We could see Euro head back up towards the 200 200-day moving average of 280, maybe by the end of next month. So maybe a speculative one to look at the moment. That's it for me today. More updates tomorrow.